This holiday season, we're helping you catch up on all your favorite FreightWaves TV shows. You can now watch the latest freight news, market insights, and in-depth discussions on your preferred streaming platform. As our gift to you, if you purchase a FreightWaves Live Atlanta ticket from now through December 18th, you'll receive a free Apple TV 4K. Download the FreightWaves TV app today and you'll see freight has never looked this good.
It's Thursday, and that means another episode of FreightWaves Now. We have a full lineup for you today with Donny Gilbert talking to the brokers out there. We have Kevin Hill making a weekly appearance on the DHL Supply Chain Pricing Power Index. But first, a word from Zach Strickland on a carrier update sponsored by PowerFleet.
Hey everyone, and welcome to your carrier update sponsored by PowerFleet. So we've seen volumes exceeding last year's levels. Looking at the outbound tender volume index up here in the blue, that's where we're at right now at about 10,315 this year in terms of outbound volume. 97.23 last year, so a lot weaker situation last year. Now we do think that some of this has to do with the fact that we have less time in between the Thanksgiving period and Christmas. So that's going to really compress the amount of time that shippers have to produce enough volume to ship out. So we don't think that, however, this is the total reason. So it's just way too high. It's 8% higher than last year, for instance. So where in the country are we starting to see some of this conditions change? So this is the outbound tender market share with the outbound tender rejection index on top of it. So anything in blue, tender rejection rates are really starting to pile up. But this is last week's map. This isn't this week's map. I wanted to put this up here first just to show where everybody, how the conditions are changing week over week. This time last week, things were a lot less settled. We were starting to see things really settle down after Thanksgiving. We thought we were going to take a breath like we normally do at the end of the holiday period, but it really, really didn't stick because we started to see a lot of volumes across the Midwest pick up along with the Northeastern corridor. So anytime that we see this action happen, that means that we're just starting to think that this Christmas time period is going to be a lot less stable, for instance. So this week, however, a lot more blue on this map. Tons of blue out here in the plains, out in California, surprisingly out in California, which has been a very stable period, or a stable area of the country over the last several weeks. Up here in the Northwest, we started to settle down. A lot of unseasonable instability up there over the first few weeks, but really across the wider range of the country, we've seen a lot more instability across the upper Midwest, the Southeast starting to show up in terms of outbound tender rejection rates. So really not a settled environment right now. Carriers need to be watching all of their shippers. They have potential for making increasing margins on the spot market when it is available. So looking out here across the middle of the country, we've got Arkansas really starting to pick up. I wanted to change gears here for this is the head haul index. So the weekly change in head haul values. What that is instead of just showing you straight outbound volumes, I wanted to show you, well, here's where the most chance for disruption is going to happen. Anywhere in blue is effectively going to have more outbound than inbound volumes over the last week. That's going to mean that you're going to have a lower supply side situation for trucks in that market. A lot of these regions up here that we've seen, a lot of regional instability, Columbus market, Harrisburg, for instance, Newark, New Jersey, and down here around Savannah. Now, this is the time of year that we see all these ports. They've already got a bunch of freight coming in from the ships. They have a lot of DC sitting in these markets, and then they start to do replenishment. So after Thanksgiving, all these orders go out into the world, and they start to fill up the retail stores and retail spaces. So looking at the Savannah market, we see right here, this is the outbound tender volume index for Savannah. 104.37 right now. We're starting to see things pick up a little bit after the holiday. We expect that. Now, peak season was over here in September, at the beginning of October, and it really fell off. Savannah has been one of the largest or the fastest growing markets in the United States, especially due to the fact that we're seeing a lot of freight pull forward, Chinese tariffs, all that. Cats and dogs living together in Savannah. But down here, you have the short haul. The short haul volumes are really starting to drive that, along with some regional freight movements on the mid-haul volume index. Surprisingly though, long haul outbound tender volumes as well are starting to pick up. So anything moving over 800 miles out of the Savannah market starting to pick up. So carriers out there looking for freight in the southeast, the Savannah market is a great option moving forward. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
I'm here with Donny Gilbert with the Broker Update. Donny, what do you have for us today?
Today we're going to start by looking at the outbound tender rejection rates for the dry van and reefer right now. So here in the blue here, of course, I have our dry vans, and the reefer is in red. Our tender rejection rates are over here on the right, and of course these are our dates down here at the bottom. Starting out with the blue, we see a nice steady increase for dry vans. Here it dipped down and kind of flattened out here right across the Thanksgiving holiday, but has slowly kind of continued to keep rising. This is showing us right now for an average for, this is an average for the entire U.S. On average, the dry van tender rejection rates are slowly climbing, and that will mean our spot market rates are also climbing very slow, and right now at 7.95%, they're just above contracted rates. So we're headed in the right direction. Gotcha. Of course, now we're approaching Christmas, so I would expect these to continue to rise all the way through the Christmas holiday. Now, reefer did something a little bit different here on us. We kind of got a little roller coaster here with the reefer. It picked up, of course, delivering those turkeys for Thanksgiving,
right.
And then right after Thanksgiving, reefer started kind of diving down for a few days. And now as we get back closer into this, a few weeks before Christmas, reefer has actually started to turn around. Now, reefer's at 17%, which is still well above our contracted rates. Once we break about the 7% mark, we're getting above contracted rates. Getting above 10%, that's when it starts to get exciting.
Gotcha.
So here, reefer's still well above contracted rates, but they were on a downward trend for quite some time. So now we're seeing reefer turn around too as we approach, here we got Christmas just a few weeks away.
Right,
so that's good. Right now is probably the best time for especially brokers to get in and get those margins right now, especially before the first quarter. Now we're going to start in and look at kind of the big markets. A lot of people last year, these were the markets that they were headed in and out of, and they were expecting to make their big money off of. Here we had Atlanta, Memphis, Harrisburg, Chicago, and LAX. But it's kind of a different story for those this year. Here in blue, I have the Atlanta, Georgia market. It's way down here at the bottom.
Okay.
And Atlanta, Georgia's 4.73%. That's telling me that spot market rates out of the Atlanta market, they're right there kind of in that area where, the contracted rates are. They're not above them, they're not below, they're just kind of mixed in with the contracted rates. So you're not really getting any kind of volatility out of the Atlanta market. Moving over to the Memphis market here in green, it's a little bit better. It's 7.9%, but it's just kind of picked up, here it peaked for Thanksgiving again, dropped back down, but here we're at 7.9%, so it's probably right above contracted rates for that market. So again, not a lot of volatility. It's going to be tough to make any margins out of these markets. In red, I have Harrisburg. It's 8.15%.
Okay.
Same story. In purple, we have Chicago, 6.92%. And of course, LAX has actually jumped up to 7.49, which is exciting for LA. Again, we're seeing some upward movement, but they're still just kind of hovering just right above those contracted rates. So here we got, carriers are pushing their rates up, and shippers are trying to push those rates down.
Gotcha.
So if you're in the middle as a broker, you're still kind of right now getting some compression on those margins, especially on these larger markets. So what we need to do, you got to dig around and find different markets. You can't just expect to stay in the same markets. Denver, Colorado.
Perfect example.
Perfect example. I've never enjoyed working out of the Denver market. It's a backhaul market,
right.
12 months out of the year. Denver's one of those markets. It absorbs a lot more freight than it does than an outbound freight. And the reason is Denver's kind of a hub that supplies those mountainous cities in the mountains, your Vail, Aspen, Breckenridge, and of course on up into Wyoming as well. So the freight will come into Denver and they'll go into DCs and then they'll be dispersed into those smaller areas because there's nothing, any other big city within 500 miles of Denver.
Gotcha.
And their outbound freight's a whole lot less, so they absorb a lot of freight. So therefore their outbound rates are a lot cheaper.
Okay.
The cheapest load in the history of me ever being a broker was out of Denver I believe going to Kansas City. And when you think of booking loads out of Denver, it's probably a beer load.
Right.
And I believe it was around 65 cents a mile plus fuel.
Wow.
I've never enjoyed the Denver market. But today, 12.45%.
Okay.
This is the highest tender rejection rate that we've seen in Denver, Colorado since, I believe, September of 2018.
Okay.
So this is a market that you need to jump in and find. And if you see, it's happened here in the past week. It jumped up on the 5th.
Right.
So if you're using a rating tool, if you're a carrier using a rating tool, you're back here on the 4th. You might show a lot lower rates. So this is a market where if you're using sonar and you can see where the market trends have trended upward, well, the people that you're pricing for, the carriers, they might still see the lower rates. So boost your bids going to your shippers and push your carrier rates down because they're probably using a rating tool and they're probably 7 days behind. That'll help you increase your margins. But a lot of people don't look at the Denver market because they're used to what goes on, used to a backhaul, used to 80, 90 cents a mile plus fuel. Take another look.
Excellent. Well,
Jumping
Donny,
in, we're going to go to Buffalo, New York next.
Okay.
Buffalo, this is a good market. And the reason I say this is a good market for today is because yesterday it was getting blanketed with snow.
Okay.
A storm came through, dropped a bunch of snow on Buffalo. Not a bunch, but some snow on Buffalo. And that slows your trucks, your inbound trucks down. They'll shut down because of the weather. That disrupts your shipping and receiving. So today they're trying to get caught up on that. So right now they're backed up. Tender rejection rates are pushing up. We're at 13.5%. Book your loads out of Buffalo, increase your rates, increase your margins.
All right, Donny, so it sounds like Denver and Buffalo, markets to watch. Thank you so much for that broker update, and thank you so much for tuning in.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcast.
I'm here with Kevin Hill. Kevin, what do we have today?
We have the DHL Supply Chain Pricing Power Index for this week, and we are seeing that carriers are getting their mojo back.
All right.
So basically when we started about 3 months ago, we were about 45. We trailed all the way down to 15 until about 3 weeks ago, and we've been climbing steadier and steadier and steadier up. And a lot of that has to do with what Donny was talking about with rejection rates. Rejection rates are now well above that 5% we've been seeing for all of 2019, and up to 7-8%. We cleared out through the holiday. We're in the holiday peak season right now. We're 1 week shorter than we were last year, so I think demand is kind of piling up. 7% above on load volumes. We have an early Chinese New Year this year too, which is probably condensing everything and boosting the market, which is good news for carriers, good news for shippers too, because you know the University of Michigan Consumer Sentiment Index, 20-year high. I know you know that number, right?
I do.
You know, very good metric for you.
Zach Strickland does not.
Yes, it's 96.8. It's the highest it's been since the 90s.
Okay.
So it's really good. It's really good news for both shippers and carriers, and for increases in rates as well.
Gotcha.
We also had the Fed met yesterday.
Right.
No rate cut, a strong economy, strong movement.
Right.
It kind of goes back to that consumer index. Then we had some news on China tariffs this morning as well, which kind of boosts that up a little bit. The stock market's running up a little bit right now, new record in the Dow Jones.
Okay.
And also our truckload index, the FreightWaves truckload index that we keep tabs on. The full truckload portion of that was also up about 1.8% this year, this week. So we had really strong stock market action. We're coming off the troughs of that. So all in all, 35 is a really good number for that. And that's the DHL Pricing Power Index for this week.
Excellent. So it sounds like you said the pricing power is starting to make its way back and back closer to the carriers.
It is.
Inching there slowly but surely.
It is. So we'll probably see this through December.
Okay.
And then once the first quarter of 2020 hits, then we'll see kind of where we go from there. It's a soft quarter anyway. So excited to see what happens in 2020.
Excellent. Well, Kevin Hill, thank you so much. And thank you so much for tuning in for this segment. We'll see you on the next episode.
In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
And that's going to do it for this Thursday edition of FreightWaves Now. As always, be sure to like, comment, subscribe down below. We're also available on all your favorite social media platforms, and if you're looking for more content, we just launched our FreightWaves TV app, available on Apple TV and your favorite streaming platforms, also available for Android. Thanks for tuning in. We'll see you next time.
FreightWaves continues to follow the incredibly sad story of Indianapolis-based carrier Celadon Group abruptly shutting its doors, leaving 4,000 people without jobs weeks before Christmas. We here at FreightWaves want to help. FreightWaves has established a free job board for companies to post their openings and for people looking for employment in the freight industry to share their resumes. There's no cost for anyone to participate. Hundreds of jobs have already been added to the site since it went live on Monday. If you're looking for employment or have a job to post, head to freightwaves.careers.